Good morning and happy Feel Good Financial Friday on this first day of July 2022. We are coming to you live at 8:15 a.m. on Friday, of course. With me, co-host extraordinaire Kim Lanciel, also financial literacy consultant, as well as Sam Castellan, real estate development expert. I am George Kroustalis. Thank God it is Friday. A miserable end to a quarter yesterday. Let's see what we got here. Worst stock market first half measured by the S&P 500, down 21%. Worst start since 1970. Only third worst start in history, for that matter. 1970. That's over half a century. Sam, you weren't even born yet. I was.
Certainly not.
None of us were born yet. That was a long time ago, 1970. So that's just not good. Well, worst corporate bond return as measured by the iShares Core U.S. Aggregate Bond ETF, down 11%. Worst start in history, and that goes back over 100 years. So it is quite amazing. Crypto didn't fare better. Sam, I know you're going to touch on that later, but it's a new day, it's a new month, it's a new quarter. Maybe we can have some new hope. Kim, take us down that road.
Yep. So let's give us absolutely some new hope. So best thing that we can do is we know it's here. The bear market is here. Gotta keep our cool. Take a drink of water, step back, and just assess the big picture that we're looking at here. Me personally, I've kind of moved some cash to, more cash out of some of my investments, just for other things that I want to kind of enjoy that I'm going to touch on a little bit later here. But we all have to understand that there's steps that we have to think about and that we definitely know about, but we just have to kind of keep reminding ourselves that this is normal. It doesn't feel really good, but it's here and we have to accept it. So we also have to understand that it happens and it's happening for good reasons. So we are getting a lot of things thrown at us right now. We still have this inflation. Supply issues are a huge issue. I'm running into friends who are trying to do remodels because they've got some extra money, and it's just not happening. It's just not moving forward. We still have the war going on, and that's affecting some people. Even some people aren't choosing to go to Eastern Europe to go visit their families. I have friends that are exactly like that because of what's going on over there. It's, slow economic growth is going on, and the interest rates, both ends, it's hurting us from that. So you kind of have to think to yourself, no alarms, right? Don't set up these fire alarms in your head, in your portfolios, anything like that. So, just do your best to try to not get caught up on the day-to-day what's happening with the markets, though it's really hard if you do follow the markets. And I feel people's pain. I feel my own pain, but stepping back and, just kind of look at your own personal portfolio and not compare it exactly to the markets and the market's performance. Just look at it that way. And then you have to kind of think, think about your own personal financial health and also what's in your own head. Because if you keep getting caught up in all of this and, not pulling back and looking at the big picture, then it hurts your own physical health. We've talked about many times, about the psychology of money. And that's really kind of what is happening right now. People are, thinking too hard on this one. And we know that the overall market's performance is low, isn't good. So, ask yourselves, knowing and understanding that competition is healthy and it's a good thing. And we're all in this for the long run, always going back to compound interest, what it does for us and what it's going to do for our future. So also knowing that we are always one step closer to our own financial goals and, building that nest, whether it's building for a home, in the kind of like the short term, major purchase, or, and again, for our nest egg, for our retirement, we kind of have to think about that. George, I think I'm on the right track of kind of sort of giving our listeners some tips, and I hope that people understand. Right?
Listen, it's great. It's great advice. It is very true. Stocks do not go up in a straight line. We know that. It is volatile. I think if you look at, all the years and all the time periods, stocks go up roughly 2/3 of the time. Well, there's another third of the time they do not go up. So it's great advice. It's great perspective. I think what's got everybody rattled this first half of the year is the magnitude and the velocity of this move. I mentioned the 21% in the S&P. That is, again, close near historic.
Yep.
But the NASDAQ, it's even worse. Tech stocks over 30%. Now, granted, they doubled between the years 2019 and 2021, or nearly doubled, as did the NASDAQ 100. But it's been fast, and taking a drink of water and slowing down is great advice. Taking a drink of anything else may be even better advice, especially on this Feel Good Friday.
You got it.
Sam.
And also just kind of like keeping a watch list. It is really, really helpful. You can do that with the apps. And like I said before, knowing that we have time to rebound, and just trying to like have some fun here, right? If you got a little bit of money in your pocket, I'm planning a trip to Europe. I just purchased a ticket that's actually less money than I paid for a round trip ticket to Charlotte and also to Des Moines. So I'm going to definitely enjoy that. Exactly. So I just have to keep to myself, keep it cool, Kimberly, and just one step in front of the other.
Great advice, Kimberly. Thank you. Sam?
Yeah, George. And on that, look, I think that we're in a very special moment, as you just described, but like in everything else in life, you can see it as a half empty glass or a half full glass. And I really want to encourage everyone today to have like a positive perspective on how things can be. Because if you think even in the markets, right, like if markets are really that down from their good old heights from a few months ago, that creates an opportunity for all the buyers, right? And that creates an opportunity for all the bears out there. So if you think like companies like Snapchat, that they were like $80 per stock like 3 months ago, right now they're like at 13, right? They're like 5 or 6 times cheaper than they were like a couple months ago. Well, that's maybe an opportunity to get into the market. And so I think that we're going to start seeing that effect in the next few months of people that, again, maybe they're millennials, maybe they're like starting to learn about the market, like with the lessons that we're learning from you, right? And so all this, I guess, new investors can really get into the market in a one lifetime opportunity. So I think that creates an opportunity, an environment like this. But then we see that same in crypto, right? We see, for instance, on Thursday that the European Union created the first regulatory framework for crypto. And so again, like you can see this as a negative or as a positive news, because if you think it as a positive thing, even though that there's like going to be more regulations now, well, that creates also an opportunity, because all these institutional investors will be feeling more willing to invest in crypto, since there's like not a Wild West environment anymore. It's going to be a more regulatory or regulated environment. And so that creates, again, an opportunity for people that maybe they haven't been in crypto, maybe they haven't bought any Bitcoin. And now that Bitcoin went down from 60,000 to 18,000 for over this week, maybe that creates also an opportunity for people that wants to get into crypto. Finally, same for real estate. We see that effect in people that they're seeing those interest rates higher and higher, but then people that are selling their home, they're saying like, well, maybe we will wait, and so they're renting their homes for now, and they're creating that cash flow. So again, like in every environment, there's always an opportunity to make more money, an opportunity to see the things positive, and I encourage everyone to kind of see the positive side on this one.
That's great advice, Sam, and you're right. There is opportunity. Listen, for all of our viewers who are in any sort of retirement plan, or who have a dollar cost averaging systematic investment plan, this is the best thing that is possible. You're buying lower, and that is how you make money. We always say in the business, sometimes doing the most uncomfortable thing yields the best results. Well, it is a holiday weekend, so anything exciting going on this weekend for you? I know, Kim, you are traveling. You're in downtown Charlotte there.
I am. Yep, we're going to hit the road. I think tomorrow morning, even though it's going to be a rainy weekend in Charleston, South Carolina. My husband hasn't been there. I was there a long time ago. There's plenty of museums that we can
always
a great place.
And plenty of great restaurants. You're not going to
absolutely
lose out there. Fantastic. Nope. Well, listen, to everyone out there, have a safe, healthy, and happy 4th. and a better second half of the year. We are hopeful. Hard to get much worse if you're looking from a market perspective, but hope everybody has an awesome holiday. To all the Greek American and Greek viewers out there, Kalomina. See you next time. Ciao.